As for global analysis, I have divided it into five parts. First, the current situation or change of the global economic and financial market. With growth slowing in most major economic, debit has become a global concern. The main trends influencing the economic contraction at present are the intensification of global geopolitical risks, the strong cycle of the US dollar, long-term impact after COVID-19. Third, stock market performance and exchange rate trends in different regions. So the global stock market is currently showing a more obvious recovery trend. On the whole, the continuous development of emerging markets, the continuous upgrading of industry structure, and the in-depth application of AI technology valuation will continue to bring a new driver force to the global stock market. In terms of currency exchange rate, the dollar will continue to rise and become more flexible. The ringgit is weak against the major ASEAN currency. Third, analyze and outlook geopolitical events and situations affecting the global economic. At present, geopolitical conflicts are structured, integrated, and long-term. For example, the continuous change and development of China-US relations and the prolonged Ukraine crisis will continue to head up religion security outputs, which may lead to the rise of political extremism on global scale and the possibility of global political ideological division. Fourth, the impact on demographic and social change on consumer and on market and economic development. At present, the change of global population structure shows the characteristics and of various difference in population growth rate between regions, accelerating population aging, fertility rate tend to decline, and international population migration. The change of social consciousness will promote the diversified development of consumer behavior. The end is forecasting the future global economic and explore the development potential. The global economic outlook is not very objective for some time to come. Regional financial conditions remain tight, and the inequality will continue to worsen as global tensions continue to rise. The digital economic and the closer regional cooperation will become new driver of world economic growth.
Now I want to present the regional analysis. The GDP of Asia Pacific region is increased in 2023. However, the Russian invasion of Ukraine has increased uncertainty and disrupted commodity markets in recently. It affects the prices of traded commodities have continued to increase, while the supply is insufficient. Besides that, the employment in the Asia Pacific region also increased. There are three largest sectors in terms of employment. The first one is agriculture, forestry, and fishing. The second one is manufacturing, and the third one is wholesale and retail trade. Next is the current market trends and dynamic in Asia Pacific region. According to various analyst report, the Asian market has experienced rising in the digital commerce adoption, and also omnichannel retailing is changing the retail industry. Online and offline buying should be easy for the customer. Next is the market demand that could impact the company's product and services. Top glove market demand decreased after the pandemic recovery. This led to PPE demand also decreased, especially the glove. Top Glove is a prominent glove manufacturer, may transition from pandemic-driven growth to normal market conditions. Besides that, Sunways Berhad revenue mainly from the building and infrastructure projects. By increasing the federal funds rate and inflation rate in 2023, the federal is reducing the supply of money available, causing the Fed to tighten its monetary policies by aggressively raising its policy rate. So this will add pressure to some segment of household loan borrowers, and also the property sales also decrease.
Good morning, Dr. Emma. Today I am presenting the domestic analysis. First, microeconomy indicator. The quarter of 2023 saw the Malaysia GDP grow 3.3%. Domestic demand supported growth. Malaysia headline inflation rate remained at 1.5% in December of 2023. The unemployment rate declined further to 3.4% in third quarter of 2023. Next, interest rate and monetary policy. Malaysia's short-term interest rate was 3.77 in December of 2023. In December 2023, long-term interest rate, which is government security yield, 10 years was 3.73%. Next, fiscal policy and government spend. The budget remained titled to the expansionary side, with the government projecting a fiscal deficit of 4.3% of GDP in 2024, compared with 5% in 2023, while total expenditure was also revised upward by 2.8% to 397.1 billion on higher operating expenditure. Next, currency strength and exchange rate. At the end of 2023, the value of ringgit had dropped by 7.3% in relation to the US dollar. The decrease is consistent with those of other Asian currencies, including the Filipina negative 1.5%, and Singapore dollar negative 8% and the Thai baht 3.8%. Next, consumer confidence and spending. Consumer confidence in Malaysia decreased to 78 point in the third quarter of 2023 from 90 point in the second quarter. Consumer spending in Malaysia increased to RM 2407041 million in the third quarter of 2023 from RM 229364 million in the second quarter. In addition, labor market condition. Labor force grow marginally. The labor market is improving as unemployment fall and job possibility rise, supporting consumer spending and economic growth. The country labor demand improved as 22.7%. More employment was generated. Total is 31700. In addition, housing market, the property market improved in 2023, especially in the second half after the COVID-19 pandemic. In the primary housing sector, 690 units were launched in third quarter of 2023, up from 4,797 in second quarter. New launch and sales performance improved over the last 4 years, with 14,392 units launched and 11,273 units sold. Next, stock market performance. Korean Kospi positive 14.85%, Indonesia JSX index positive 4.92%, the Stock Exchange of Thailand negative 16.41%, and Hong Kong Hang Seng index negative 14.56% also fell. Some Bursa Malaysia equities performed better in the second half of 2022 due to power, construction, and properties.
Malaysia's banking system remained well capitalized throughout the first half of 2023. 1H 2023, with the banks continue to maintain strong liquidity buffers, said Bank Negara Malaysia. In its 1H 2023 financial stability review, the central bank reported that the aggregate liquidity coverage ratio and net stable funding ratio were far above regulatory minimum at 154.4 and 117%, respectively. Malaysia has two sources of law: the national constitution and the Sharia law, which applies only to Muslims. Investment in the nation are facilitated and supervised by the Malaysia Investment Development Authority to encourage international trade. Malaysia has a number of free trade agreements with other countries. The 12th Malaysia Plan 2021 to 2025 stated that accelerating technology adoptions and innovation as one of the plan's four policy enablers. The plan further that 50% of all government's research funding would be allocated to encourage experimental development and had a high commercialization potential. Many global industrial giants have invested in Malaysia due to the unit's government's political stability during the past year. Due to its clear policy, Google, TikTok, Information Technologies AG, and Tesla trust Malaysia. A stable political system, they have confidence due to a governmental stability and clear policy. ESG investments is part of financial and social return investing. Pure financial investing aims to maximize shareholders and debit holder value through financial returns based on absolute or risk-adjusted measurements. Imports achieved a significant milestone by surpassing one ringgit trillion for the second time. The country's trade performance also met the Ministry of Finance Economic Outlook 2024 forecast, with trade exports and imports reaching 100.1%, 99.7%, and 100.5% of the estimates respectively. The rise in domestic investors indicates growing investor confidence. The fact that the domestic investors accounted for up to 45% of the 225 ringgit billion in approved investments between January and September of this year demonstrated this. In Malaysia, as a forecast or outlook, GDP projection is 4% to 5%. We expect BNM to keep its policy rate at 3% in 2024. Higher exports in electronic and electrical sectors and our assumption of higher commodity prices strengthen Malaysia's BOP, supporting ringgit appreciation.
I will cover industry analysis part. Without further ado, let's dive into the post-pandemic reality of the disposable glove industry, where the boom has faded but opportunities remain for resilient players like Top Glove. Top Glove, the world's largest glove manufacturer, has faced challenges as demand has normalized, but its recent price trend shows a promising climb indicating potential recovery. The stock has been on upward trajectory since October, with key breakouts and consolidation. Support at 89 cents suggests a solid foundation, while resistance at Ringgit Malaysia 1 indicates potential selling pressure at higher levels. As for the volatility that's settled compared to pandemic high and low, now for the main question, why consider Top Glove? Because potential for high earnings and revenue growth coupled with growing health awareness and domestic COVID-19 surges making it a compelling choice. Sunway isn't just a company, it's a well-rounded portfolio. Since October, Sunway's price has skyrocketed, breaking 2 ringgit 50 cents and leaving competition in the dust. Why? It's all due to sustainable township, innovation in construction, healthcare boom, as well as the exclusive unique experiences they provide. Sunway's price broke through the resistance of Ringgit Malaysia 2.42, showing a bullish strength. Sunway's price moved roughly in sync with the market, offering stability. As for the outlook, it's positive. Diversification and strategic investment contribute to a well-rounded future. Why Sunway? Their healthcare expansion, premium real estate ventures in Singapore, and potential IPOs paint a picture of company on the rise. NVIDIA's GPUs aren't just powering our graphics, they are fueling the future of AI, high-performing computing, and the immersive metaverse. Gaming conquer. AI and HPC, we are talking superpower. The metaverse buckle up, it's coming, but NVIDIA's isn't without challenges. AMD and Intel are stepping up their game, but NVIDIA's got staying power. The price is been on steady climb, breaking key resistance levels and indicate further bullish momentum. Sure, there's volatility, but the long-term trend is bright. And now, why NVIDIA? Because they are the engine behind the hottest trends in tech, AI, gaming, and the metaverse. NVIDIA's got them all covered. Risk, sure, but the potential is massive. That's it from me. Thank you.